Dale, Ira Epstein, and we are now with your financial market wrap-up for this Tuesday, and we are sitting here on February 11th, 2020, just around 4:50 in the afternoon. You know, I was watching CNBC, and very clever what they were bringing up. You know, I love to listen because you hear ideas that you forget about. And one of the things, they had this woman, I don't remember her last name, it was Estelle the first, and she was quite right in what she was talking about. She brought in a conversation. They were talking, what's the most important thing to the market, be it coronavirus, which they've changed the name. It's COVID, COVID-19. Corona, virus, the VI, D for disease. COVID-19. So you're going to start reading about that. They've given it a formal name. But the Fed obviously is what the market wants to have its back. Another thing that keeps going is the Fed has the market's back and keeps interest rates low, real low. Corporations have been using that money to buy back stocks. It changes the EPS, the earning per share, and keeps this market buoyed. I had talking to Rick Santelli a year ago. Rick and I are friends, and I see him on the floor all the time. And we had talked about that. I remembered the conversation that she triggered it. And he said, you know what keeps going these markets? To a degree, it's less stock out there. Interesting point. Well, when we're looking at the tech sector, you know that this is a powerhouse sector, hit an all-time high, and it's starting to get at least a one-day little pullback. Now, I was looking for today to be a Tuesday reversal day in many markets, and we saw that. You were up strong yesterday, down a little bit today. Certainly not a trend change. When you look at the swing lines, you still have the pattern of higher lows and higher highs. Definition of an uptrend. What would break it is taking out this 99.09 level, which was, am I correct? Yeah, yesterday's low in the market. That would break the pattern of higher lows, higher highs, but it would not set off a downtrend because the worst you'd have is a higher high and a lower low. The support in the market, it's back where the 18-day average of closes is. I call it the 18-day MAC. This is the 100 and the 200. So even if the market broke, I'd be looking for some semblance of support there since the market has had a history of doing that. Okay, bearish? No, but watching what's going on. And the reason I was looking for the reversal, a strong Monday against upper Bollinger Bands, and you stalled. That's it. Not looking now for the reversal, don't know what I'm looking for, right? Well, I'm looking at a market that's overbought that has to make a decision. Does it embed like you did back here, which puts the two lines that make up the slow stochastic both over 80 for several days or more? Hasn't done that yet. It did it yesterday. It did it today. The day before yesterday, you didn't have that. So tomorrow's an important day. Is the market going to embed, which sets me off then on another part of my strategies, and I teach these all in my charting course. So it's really 5 things that I teach in the charting course, and each one feeds on each other, and each is a filter of something else. So if you want to know about that course, doesn't matter if it's futures or not, I teach a chart as a chart. In fact, when I teach the videos, and I create videos for this, there's about 60 of them, often I take the complete name and scale of the chart off. I want you to get used to the patterns and what the market is doing. So I start you off in PowerPoint, then I walk you to how you apply these indicators, then I take you to the chart, and often then I'll surprise you and tell you what the chart is. But higher lows, higher highs, overbought market, tomorrow's an important day. When we come to the industrial sector, overbought. My eye catches that right away. Trend is up, higher lows, higher highs. Next resistance spot, 85.32. To get back to the 18-day average, you would break the uptrend temporarily. As we come to the energy spider, I lost momentum right over here this day. If you'll recall, you had the embedded reading. Both numbers and all the numbers had been staying under 20, and then you lose it. I think momentum moves ahead of price. So the momentum, even though it pulled back, my work was saying, no, you might want to consider being out of shorts. And I pay attention to my work. I know the trend is down. I realize we're under that. I lost that momentum. When you lose the momentum, often price and the 18-day average want to come back together. In the QQQ, this market could embed. You're up at the resistance point. It certainly held on well. The resistance is the upper Bollinger Band. The market's had a habit of hugging it. It's still doing so. What breaks the uptrend on the swing line would be taking out the lows of Monday. That low would have been 228. Did I say that right? Yeah, 228.38, and that would break it, but I don't know that that would turn the trend down. You could still embed with that. You've got today both numbers over 80. Yesterday they were not. I'm wrong. You can't embed. I thought visually they could. You're just plain overbought up here. In emerging markets, overbought. Any reading over 70 by one of the numbers is overbought. To embed, they both have to be going sideways over that 80 level, and more times than not, they don't. So that's a sign of a trigger that you're losing the upside momentum. Well, we don't have that. This market's still pointing up. The trend is up. The number you wouldn't want to see taken out if you're going to keep a pattern of higher lows, higher highs over this with the bias up is 68.85. If you got a big pop for some reason, maybe you can get to the upper Bollinger Band. In GLD, you turned the trend which way now? Well, if you look at the settlement, you settled 147.66 right here in the black over the 18-day average of closes. You're still caught very much and not making a move out of this sideways action in GLD. In the gold miners, I'm just going to do on these charts the majors, the juniors. If you want me to put them into my paid subscriber list, I'll be happy to do that. Let me know. But you've got the lower highs and higher lows. So if the market breaks down from here, I'm going to look for support between the lower Bollinger Band of 27.87 to 27.77. If the market's going to turn up, the key is to take out 28.67. That would give you higher lows, higher highs over the 18-day average, which could mean the market's coming back up to challenge the upper Bollinger Band or that area. It's missed the last two times. It had hit it back here, so it's still churning itself, but that's one of the things I'd be looking at. TLT is confirmed today that the swing line is turned down. Now, the bias is up since it's over the 18-day average. That bias would turn down on any close under this red number, and already momentum is turning down. So this market's lost its way. That's the best way to say it. It's not a trade vehicle at this point because while the swing line's down, the bias is up. In the FXE, which is the euro currency ETF, we still have the market pointing down. We still have the lower highs, lower lows, and I believe we have an embedded reading. Both numbers were under 10 today, under 20 today. Both were under 20 yesterday and the day before, even the day before. So you got 4 days in a row. Rallies in this market until you get that red line over 20. I think the market is still being looked at as the pros by a way to be selling. If you like what I do here, I'm pretty certain you're going to like the afternoon ETF where I cover a lot more charts. I throw out, I want you to buy here, I want you to sell here, I'm saying what to do this way and that. It is free right now. So if you want to go to our website under free offers and look under the Spider ETF video, you're going to get your hands full. And the reason I do it in the afternoon, they don't open in these markets, the ETFs and the spiders, until 8:30 in the morning. Gives you plenty of time to look at it, and you do realize a lot of these are impacted by what the futures are doing. So my morning subscriber video on that might be something in the future, something you want to look at, because it gives you a pretty good handle, that's the right word I'm going to use, on what to expect going into the opening of the stock market. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.